What's going on, guys? Welcome to the weekly technicals live session for November 18th, 2018. And I just want to go over the economic calendar before jumping into the technicals. So this week we do have Thanksgiving, and so just be cautious of that. Typically, whenever we have a holiday during the week, we won't see we really, in my opinion, probably won't see much price action or anything with any of the majors here on Thursday, but Monday through Wednesday will be kind of like my window of opportunity for trades this week. Won't really be focused on anything Friday because it will be kind of like following Thanksgiving, and any of the holiday volume will kind of roll over into Friday. But Monday through Wednesday will kind of be like my scope or my window for trades this week. And if you look, we do have some Australian dollar news around Asia session for Monday, and as well as some yen news around Asia session as well. And if you look on Tuesday, we have GBP, we have inflation report hearing, so that's 2 a.m., that's London session, so there could be an ideal opportunity for GBP USD here on Tuesday. And 5:30 a.m. we have building permits and housing starts for the dollar index, so we've got some dollar index news as well, New York session. So Tuesday and Wednesday will probably be the better days, in my opinion, for trading this week. So Wednesday we have medium impact GBP news, and New York session we have some dollar index news. So New York session will probably be pretty active here on Wednesday. So again, Monday through Wednesday will be kind of like my opportunities, and ideally London, New York, Tuesday and Wednesday session. Tuesday and Wednesday, both London and New York, will kind of be the time frames when I'll be focusing on the markets. So, and then if you look, Friday we do have a good bit of CAD news, so we could see a lot of volatility here in the Canadian dollar. But again, I won't really be focused too much on the charts on Friday. But let's go ahead and jump into the technicals for the week. And we're going to start off with dollar index again on the daily, just like we do every week. And if you look, we hit our objectives mentioned in last week's technicals. So we were talking about dollar index coming up and hitting the 97.20 to 97.50. Those would be our first targets. And if you look here on Monday, we came up and we formed a high at 97.69. So we blew through both of our targets at 97.20 and 97.50. As you could see, though, we did not see any continued expansion to our higher time frame levels where we had 97.80, 98 big figure, 99s, and so on. What ended up happening was we ended up forming a top here, or I don't want to say a top, but we formed a high, and then the market came back down. We had two very, very, in my opinion, just nothing days in the market. This was Wednesday and Thursday, and if you look, we have really small bodies and pretty large wicks on each side. So these both days here were, pretty much just back and forth in the market. If you were trying to trade this, more than likely you lost money. I took 2 losses on both these days. So, the market was just either bullish and bearish. It was pretty much working both ends of the market both of these days here. So that's kind of the price action we got in here, and then on Friday we had a continuation lower. So, with my overall stance on this, I still have to be bullish until this low here gets broken. So I'm really watching what's going to happen early on in the week. Now, in my opinion, this does, look like some sort of a topping formation. We've came up, we've ran the liquidity here, and, we've seen some resistance come in. We've seen the market sell off. We had 2 days here where we were finding resistance at this old high, and then we had a continuation lower. So my only thoughts here are we're within these 2 down candles where we could see a bit of support because these are 2 daily candles, so it would be an ICT daily bullish order block, and we could see some support come in here. So, this is that 96.50 to 96.60 level we've been mentioning. But ultimately, if we can hold above this low here, which comes in at 95.68, as long as we remain above that, the overall daily market structure will still be bullish, right? Because this is the most recent low. So if we break below this low, then the market direction shifts on the daily, right? But as of right now, it's still technically bullish. Now, I'm not going to be taking any trades until I can get a confirmation whether or not this is going below this low, or we're going to hold above it and we're going to continue higher. Okay, otherwise, if we don't do either of those things, we're just going to sit sideways in here. And that's very possible, guys. We're going into the end of the year. We've got Thanksgiving this week. Think about, price action. We could see it kind of consolidate sideways in here, just within this range. So between the low that we got here and this old high that we found resistance at, we could easily just consolidate in this blue box, for this week. And now, think about a consolidation. It doesn't last forever, but, typically there are weeks where we could just have a consolidation week. This could be one of those weeks. So I just want to caution you, to be very careful if you are trading this week. Don't put on a lot of risk, and don't try to, catch giant moves, because this is, holiday week, and typically we don't see that, as well as we're going into the end of the year. Okay, so a lot of people are, closing their positions and really just like reducing the amount of, capital they have in the markets. So we could see consolidation due to that, as well as, what's going on, as well as the holidays and things like that. So keep that in mind. But again, if we can break below this low, that will shift the market direction, and then we'll be looking for lower prices on dollar index, clearing out each swing low below the market. Okay, longer term targets, if we do get below this low at 95.68, will be this 93.20 equal lows down here that we were expecting a while ago. Okay, so that'll be our longer term targets, which is about 300 or so pips away from where we're at. And I'm not necessarily expecting that by the end of the year. That's a bit much. But, we could definitely consolidate in here, or we could start breaking below some of these lows in here going into the end of the year. And that's kind of what I'm expecting if we do break below this low, right? But as long as we remain above that, I have to assume that they're going to keep pushing price higher or consolidate. All right, so that's pretty much my analysis there for dollar index. I'm really, again, not doing anything until I can figure out what we do with this low. 95.68, essentially this 50% level here at 95.80. Are we going to get below that, or are we going to remain above it? That's pretty much what I'm looking at, and based on that information will be how I trade the markets. All right, so euro dollar. If we take a look at this again, with Monday's continuation higher on dollar index, we've seen lower prices here on euro dollar, and we hit both target 1 at 13 big figure and our second target down here at 12.20. So I mentioned last week that I was looking for 12.20 to 1.12 big figure, and if you notice, the low of the week came in at 12.15, so about 5 pips it traded into our level. Right there, we've seen the market immediately pretty much stop on a dime and then push back up here. And then we got a continuation higher on Wednesday, Thursday, and then Friday we had another pretty explosive move to the upside, taking us back above the 50% level that comes in at 1.14 big figure. So you guys have been, hearing me mention this 50% level here, and with us below it, we've been bearish. Well, now the fact that we've closed, pretty significantly above it, and we've had a nice sharp reaction from down here, that's indicating to me that we could see higher prices on euro dollar. Okay, so my first target for this will be this high here, which comes in roughly around 1.15 big figure. But for this to happen, I need them to stay above 1.14 big figure, which is this 50% level of this bearish order block here. So there's really nothing down in here that they should come back and retest, in my opinion. So they should just continue pushing higher, to 14.20, 14.50, 15 big figure. And for that to happen, we should see either a consolidation on dollar index or lower prices on dollar index. So that's why I'm kind of waiting for more information with dollar index, which will give me that clarity with what this pair is doing here. Because don't think because I said dollar index could sit in a consolidation that means this one won't either. So we could see euro dollar sit in consolidation as well. But with the price action that we've seen so far last week, and the fact that we're back above this 50% level at 1.14 big figure, I'm starting to believe that we're going to want to push higher for liquidity here, liquidity here, liquidity here, and tap back up into this range here around the 1650s to 17 big figures, which again would be perfect alignment with what we're looking at on dollar index, right? Longer term for the bears, we're looking for 93.20, which is about 300 pips from current market price on dollar index. Same thing for euro dollar, right? We're looking for the bulls, and if we do get continued prices higher, 300 pips would take us up into the 1650 to 17 big figure, which is this range here, which takes out the liquidity here, here, and here, right? So anybody that's been selling, they're going to look to come back up and take their money or their stop losses so they can remove their positions. So that's above the market now. We've cleared everything below the market. Now, if we do get back below 1220, obviously, we have lower targets down here as well. But based on the price action and the sharp reaction we've seen from 1220 and the willingness to close above the 50% level, that's pretty much convincing me that they're going to want to push this thing higher. So I will be, I'm pretty much in a neutral stance right now for all pairs. So I don't want you guys to think I'm like heavily, bullish or bearish one side. I'm really waiting for more information right now because we're really at, significant levels where we could see potential, reversals or, retracements in these markets. And that's kind of what, I'm anticipating. So I don't want to be, married to one side of the market. I'm not trying to say, oh, I'm bullish dollar and I'm bearish euro only and I'll never change. I'm not. I'm willing to, take a look at price action, and based off this price action, it's indicating to me that we could see, the bulls start stepping in because they have already, right? These are big candles, explosive candles away from the 1220 level, which were our bearish targets, right? So we've seen support there. We've gotten back above the 50% level, and to me, this is indicating that we could see, continuation higher. So that's kind of what I'm leaning towards, but overall, for that to happen, we do have to break above 1.15 big figure, right? That will break structure on the daily. As of right now, we're still within the bearish trend, but we need to push above 1.15 big figure, which will confirm that break in market structure on a daily basis for euro dollar. Okay? So let's take a look at GBP USD now. Now, this one here, it does have a little bit more room to go on the downside, in my opinion. Okay? So initially, right, Monday, we opened up and we traded right down into our target here, okay, which was an ICT daily bullish order block. Tuesday, Wednesday, we see a nice reaction, okay, so we have a nice bullish reaction here, coming back up into this level here, which we had outlined, which is a previous ICT bullish order block, now becomes resistance, right? So we had the low and also the open. Notice how the bodies stay within that. And then we have another round of selling come in. This big bearish candle takes us below these two bullish candles, now confirming these two bullish candles as an ICT bearish order block on a daily basis. So notice how we've come back and retested that on Friday. Now what I'm looking for early on in the week for GBP USD, I want to see, can we get expansion below this 1.27 big figure and potentially 2650. Okay, so if we can get below those levels, we could see a sharp retracement. So we could see the level get taken out, and then we start pushing up immediately from there. Okay, that doesn't have to happen. It's just something that I'm considering. So either level, right? We're going to run 27 big figure first if we can start trading lower. If we get continuation, expect 2650, and then from there, it's all going to depend on how the daily candle closes. Do we get a big bearish close? Do we wick through it? We have to wait for that price action to see what it'll be. And, we could see, again, a sharp retracement. So we could get, the bulls start stepping in down here. But first things first, I think they're going to want to, run the liquidity below the market before taking it back up. So, this one, in my opinion, when you look at the price action, while it is in a larger consolidation, you've got high, low, lower high, low, but it's not a lower low, lower high, lower low, right? So the next target for liquidity would be here, right? Because we're trading within this overall range between this low to this high. Okay, we've already reacted off of this resistance level. We've come down, traded back up into this resistance level, reacted, push back up into now this resistance level, and we should see them react with another round of selling, taking us below these targets potentially here. Okay, and this could happen even with dollar index in a consolidation, because we've seen the bulls step in on Euro GBP. Okay, so this is really the only one that I see, potential continued weakness on. Okay, and again, it is an overall consolidation, so we could just run the low on the consolidation and then see it kind of whipsaw and come back the other direction, right? That's why we have to, really be cautious when we're trading within consolidations. But in my opinion, I don't think they're going to want to come all the way back above 1.30 big figure before they run the liquidity at 1.27 big figure. So this in itself is about 120 pips that we could potentially capitalize on early on in the week, in and out, kind of like a Monday, Tuesday setup, be out before Wednesday, and then be done for the week and have potentially 100 pips locked in. That's kind of what this is what I would like to be a seller of, just based on the fact, how the price action looks, as well as with dollar index, I'm still technically bullish until that low breaks. So my plan aligns with a sell, for foreign currency, and this is like really the only pair that kind of fits that criteria. So I will be watching this. This will probably be my focus for the week, GBP USD. I know we haven't been focused on it too much, but again, this is like really the only one for a selling opportunity that looks ideal for me. Not that I'm against being a buyer or anything, but like I said, it aligns with my plan. I have to have dollar index confirmed to me that it wants to go lower before I could just be, balls deep buying foreign currency. But right now I can't do that. So that's kind of what I'll be expecting on GBP USD. And if we look at Euro GBP now, this giant move that we've seen Thursday and Friday here, right after running out of liquidity. So we ran the liquidity, notice the bodies of the candles hanging out around the level. One last run with this wick here, clearing out anybody else who bought it, and then we had the big bullish day. Okay, so again, just like everything else, we need to see this high break. So 89.20 to 89.40, we need to see this high break, which will confirm the daily break in market structure and continuation to the upside. So far from this reaction, I don't necessarily see that they're going to want to come all the way back down and make a new lower low. What you have to consider, though, is we do have a new daily bullish order block that formed here, right? So at 87.80, we have a new daily bullish order block, and that will be the next level of support if we do trade lower. Okay, and then from there, we should see support come in, and the market should trade higher. Right, so this is scenario one, but if we don't get that, then I'm just going to be looking for continuation higher altogether. And I want to see them break above this high, which should lead to weaker GBP, higher Euro. Okay, or Euro consolidating and GBP USD falling off the face of the earth. So that's kind of what I'll be looking for. But if we do get higher prices on this, that will align with our GBP USD analysis. As well as, the Euro USD analysis. So, you always want to check this pair just to kind of get that confirmation on, what you're looking at. And I know a lot of people were probably confused, like, why did GBP have such a sell-off on Thursday? You have to look at Euro GBP. When you see this big bullish candle, you're going to see the evidence of this in another pair. And not just any other pair, in one of these pairs, either in Euro or GBP. Whichever it is, you will see this happen. So this could have been a big bullish day on Euro, or it could have led to a big bearish day on GBP. As you've seen, it led to a big bearish day on GBP. Euro was held in a consolidation, and this one pushed higher. So not all three will be moving at the same speed all the time. Typically how it works is two of them. So for example, last week was Euro GBP and GBP USD had more movement, and Euro USD was kind of held steady, right? Because they ran the liquidity early on in the week. So make sure you guys whenever you see these things happen, make notes of them and log them and all that stuff, because these are good things to remember going forward. Each year in your trading, you'll continue to see things like this happen. Especially if you watch these three pairs that I do, Euro GBP, GBP USD, and Euro USD. How they are in sync, and how they move is unique to them, but you should definitely make notes of when you see certain things happening, like the bodies of the candles hanging out here right below these equal lows after running liquidity. Then we have a big bullish day, which leads to a big bearish day in GBP, and then a relative small to consolidation day on euro, right? So these are all things that you want to factor and write down in your journal, or make a video about, however you want to do it. Print out your chart, write it on there, but make these notes and notations so you can actually go back and reference them, and in the future you'll actually trust what you're seeing in the markets because you know that you've already seen it before. Alright, so let's move into dollar yen. Now this one, you guys know that we've been having this red box on our chart here, which is this ICT previous bullish order block, but now once we're below it, it acts as resistance. Once we're above it, it acts as support. We're pretty much almost through it again, and in my opinion, it's already used it up, so I think we'll get continuation lower on this. Not just this red box though. We do have this ICT bullish order block, right? So 2 down candles before the bullish move, we've got an ICT bullish order block. So the fact that we've had really no willingness to find support there and we've traded through it is essentially telling me that support is not being found, and we should see lower prices, or potentially lower prices. So for this, I want to see the market just continue basically trading lower and running the liquidity below these lows down here. First things first though, we need to break below the 112.60 level, and then so if we can get a continuation below 112.60, which is this low here, also the bottom of the red box, we can retest that as resistance and then get a continuation lower from there. So this is how I'll be looking to play dollar yen. But first things first, I need a close below the red box, or otherwise this ICT bullish order block here at 112.60. And really that's it for this. Like last week, I was saying we were looking for expansion on the upside for potentially 114.50, and we didn't get that, right? We pretty much just found resistance at the bearish order block here and sold off. Now we could probably take our fib and draw it on this. Notice how the bodies of the candles are respecting the 50% level of the ICT bearish order block too. Right, so I could just do this for fun. Alright, 114.06 is the level. Alright, so you can see, the bodies of the candle. This candle closes right at 114.08. So we trade into it by, barely a pip. And we trade through it a little bit here. And then look what happens. We sell off. Right, so this is telling me that we're still respecting the overall bearish market structure. Or that we're getting bearish price action. High, low, higher low, lower high, potentially lower low, which will be down here. So this is kind of, what I'll be looking for. High, low, lower high. Where the lower high form? 50% level of ICT bearish order block on a daily basis. Also, 79% retracement of the fib level. Okay, so lower high is formed at basically a logical area. Then the market sells off. Then we break through, which should act as support. We don't see support come in, we're breaking through it. So all signs basically leading and pointing me towards potential bearish market, and we could see some weakness come in, or some continued weakness come in on dollar yen here, and my targets for that will be this kind of pocket down here of 111.80 to 111.50, and if we can get continuation below this low at 111.40, I'll be looking for the liquidity down here at like 110.50s and stuff like that. But That's longer term. Right now, I just want to see, can we close below 112.60? If so, then I'll look for a retest, sell it, and look for 111.80s to 111.60s down here. And I just wanted to delete this really quickly. Okay. So let's look at Australian dollar. Now this one here, as mentioned last week, I didn't want to really go in Australian dollar because I didn't have as clear of a read on it, and it was overall kind of looking bullish to me with this big push up that we had. And look what happened. Monday we come back down, trade below the liquidity here, right? This dark red dotted line is a weekly bearish order block 50% level, so I'll show you really quickly. These two up candles, 50% level right here. Now I want you to notice what happens on a daily. We close above it on a daily, retest it, bullish reaction, fail to break the high. Market sells off, new week here, Monday, we trade below previous low where they found support at the 50% level. Bodies of the candles, right, where the majority of the volume is, closes below here. Market pushes back above it. So you don't have to be a buyer here. You're not going to particularly know, to buy it, or maybe you didn't buy it at the 50% level. But what you can do is, after this day confirms that you more than likely got a turning point, right? Because if you look at this market, if you look at this market right here, this kind of looks like a turning point, right? Even if you just look at it without, just like that. Bearish day, and then the next day, the bulls take back what, the previous day's trading had done. So we had this big bearish day, and then the bulls come back in the next day and clear out all the work that they did here. So whenever you see that, typically that is a sign of the market turning around, or a potential high or a low forming. And then look what happens. The market immediately the next day, since we close back above the 50% level, we retest the 50% level. The low comes in at 71.88. The 50% level comes in at 71.90. 2 pips. Literally 2 pips. Perfect precision. Market trades right into it. Get the expansion up, clear out the liquidity above 73 big figure, and then now we're above the 73.15 level that we mentioned last week. Okay, so I said if we get back above 73.15, more than likely we'll have to expect higher prices on Australian dollar. Now look at the price action we've got here. Low, high, higher low, higher high. Okay. Also, go back to when the market was down here on Australian dollar and listen to what we were mentioning about potentially what this level could be. So that was October 26th. So you can go back and find the weekly or daily technicals video and just study what I was mentioning about Australian dollar down here. So we had cleared out the liquidity, and potential signs here of the market forming what has happened, but before the fact. Also, Monday, once we've come and taken out the liquidity here, notice how close in proximity we were to retesting structure here. So the high that was broken, we never retested it here. We came back down, and we missed it by a few pips, right? But we always look to get in a few pips early. So this came in at 71.60, and the low came in at 71.64. So still within our 5 pips in terms of potential entry opportunity. So that would have been a potential opportunity for you to buy it here. But again, if you miss that, you're not supposed to always know that. So then this would have been the opportunity. After the daily candle closed above the 50% level, then you get in here. Because you don't have to be buying down here, because you don't know whether or not they're going to retest this level, or are they going to come back down here. And you don't want to sit within that much drawdown. So wait for the market to close above it, buy it on the retest, and then your stop loss can go below here. So you're reducing your risk significantly. Just to kind of paint a picture here, if you were to buy it, your stop loss would have to go below this low, and your target would have been this high. Versus being a buyer on this day, your stop loss you buy it here, stop loss goes below here, look at that. Significantly much more reward to your risk versus having that. Look how much bigger risk to your reward. So, keep that in mind. That's why I always wait for the daily confirmations, which you've basically got with this candle. Daily candle got back above it, confirming that support was found. Market retests it, looks for higher prices. So with this, our next upside objectives will be the 73.80, and then we've got relatively equal highs at 74.50 back here, and then some liquidity built up above 74.80. So got some liquidity built up above the market here on Australian dollar, and in my opinion, we should see higher prices on this. So even with dollar index sitting in a consolidation or potentially selling off, this pair should trade higher. NZD/USD, same thing with this one. So we had the buyer step in, market comes back down. Monday we retest what? Old high. Then we get an expansion Tuesday, Wednesday, Thursday, Friday. The rest of the week taking us where? Perfectly above our equal highs back here. So again, looks to me like the buyers have stepped in. We should see higher prices on this. Now that we've hit our objective in terms of the bullish side on the daily chart here with the equal highs, I'll be looking for the liquidity that we've got back above here. So look at what we've got now. We've closed above the equal highs. So in terms of potential entry opportunities for this, we could see just a simple retest of that level, or we could come back down within this ICT bullish order block, retest that, and then that will be where we find support and continue higher. So I want to mark out my support levels now for this, because we've got a lot of stuff going on with this chart. So the high comes in at 67.96. And again, we will have to make this blue because it's support. And so I'm just going to have the high on here, just not to have too many levels on my chart. And I'm also going to put the 50% level, which comes in at 67.47. And that'll be a dotted line. Okay, perfect. So in terms of support, we could come back down, retest this high here, which is that 68.50 level, or 68.60 to 68.50. Then if we don't find support there, I'll be looking for the 68 big figure, which is the bullish order block high. And absolute maximum for any type of weakness, we should not go below 67.50. which is the 50% level of the daily bullish order block. So, looks to me like the bulls have stepped in and we should see higher prices. Overall, the fact that we've come up and cleared the liquidity here just within last week's trading, that was about 200 pips or 170 pips or so. So that's a nice little move that took place off of this here. Once the market closed above the high, retested it, perfect entry Monday. If you missed the entry on Monday, Tuesday you get the confirmation, closes above it, and then on an intraday basis you could have found a buy or entry opportunity within this. But this wasn't a pair I was trading or anything last week. I mentioned that in the weekly technicals, but I just wanted to kind of show you guys, based on the move that we had here, we were either going to expect lower prices down into these bullish order blocks or higher prices above the equal highs. Obviously, what did we get? The market retested the high, and then we got a new higher high taking us above the equal highs here. So now we have to look at what do we have that occurred to the left of us. we have an ICT daily bullish order block. So we've got our levels marked out, and we've also got liquidity built up above here. So that's basically our range that we're working in to see where is the market going to go. Is it going to come back down and retest these levels before going up here, or is it going to continue up here first and then come back down and retest the levels? Now, in my opinion, we've closed above here, so we should retest these highs or come back down within this order block, retest that, and then that, should act as some support, and that, would be where I would expect, potential higher prices. So that's it for New Zealand dollar. Let's look at dollar CAD now. And so this one, we cleared out the liquidity above this high here at 132.25. Hung around there for a few days and then sold off. So we came back within the daily bullish order block here. Haven't closed below the 50% level yet. That comes in at 31.20. But if we do get lower prices on dollar index, or even a consolidation on dollar index, we could see the same happen with this. Now, we probably won't see too much movement with this until the end of the week, because we do have a lot of Canadian dollar news on Friday. So this thing will probably get really volatile. But if we close below the 50% level at 31.20, we have to be expecting lower prices, looking for a run on 30.50 down here, and potentially each swing low below the market. Okay, because this could be a turtle soup. So we had liquidity resting above here. We came all the way up, cleared out the liquidity, and rejected. If we can close below the 50% level, that to me confirms kind of like a breakdown, right? It won't be a break in structure yet, but it'll be a breakdown, meaning we're closing below support, so we could act as resistance there. So if we close below the 50% level here, on an intraday basis, you could be looking for a potential sell opportunity on a retest of that 31.20 level, and then look for lower prices below the 30.50 down here. So that's kind of like the scenarios I'll be watching for on dollar CAD. Now, just to be honest, I don't really like trading this pair too much. I haven't really found like that I enjoy trading this pair, and it's really primarily due to the fact that you'll see a lot of movement with this in New York session, and as you guys have noticed, I spend a lot of my time during London session. Just works best for me and the pairs that I like to trade. But there are obviously other pairs out there, and that's why I like to go over them all in my weekly technicals. But in terms of like trading this pair or anything, I don't really trade it much. But I just want you guys to kind of understand, based on the technicals here, we could see this being a potential topping formation in this pair, and we could see relative weakness and a good bit of weakness come in and start clearing out the liquidity below here, because we do have a good bit of liquidity that's built up all the way back here. And the market was trying to come forward here, but it wasn't able to. So if we've come all the way back up just to clear the liquidity above this high, and we start really breaking down aggressively, we can see this 27.50 before the end of the year potentially, which is about 400 pips or so. So that's significant, but only if we're if this is in fact what I'm seeing it as potential just run on liquidity. We really have to see them start breaking down from this. So if we can see that, then I'll probably step in and maybe trade something on this pair. But again, it's not something that I really like trade too much. But in terms of the technicals, if they close below the 50% level, you can easily look for a retest and have a first target like for an intraday trade or maybe like a day trade, and look for 1.3050 down here, right, which will still give you an opportunity of like 70 pips or so. So that's a beautiful trade for a week or a day or whatever. That's kind of how I would play it, but only if we get below the 50% level. As long as we're above it, I'll be expecting higher prices, right? Alright guys, so that is it for the weekly technicals. If you have any questions, post them in the chat box. I'm going to stop the recording and grab some water real quick.